Anyway, it's just interesting that the Labor Department is explaining the numbers away. But, every administration has its spin on the economic events. That's normal, especially in a year when they're up for re-election. And that would be true for either party. And it's also true that one data point does not make a trend, but people love to read their spin into these numbers to validate their own political positions. Since this is not the political show, however, thank goodness, because that would just make me angry every day. And angry at everybody, by the way, not just one side or the other. I'm a Libra. What can I tell you? Get angry at both of them. But, I have more fun here tracking the markets, talking about the markets. So let's move on to IPOs. That's kind of an interesting topic that's in the news this week. I did speak about it a little bit yesterday when I was sitting in for Larry. So I won't talk too much about the same names I talked about yesterday because not too much has changed in those, in case you were listening. But let's see, I did talk about an IPO. The ticker is EAC. It just went out yesterday. It priced a couple nights ago, began trading yesterday. Let me put the ticker up here. EAC. Ericsson Air Crane. So you're looking at a daily chart, so you're just seeing, a big old block there for today because there's just very little to show on a daily chart as of now. So let's see. So this priced at the low end of its range. Went public yesterday at $8 per share. They make, I think I mentioned this yesterday, they're in a very specialized industry. Heavy lift air crane helicopters. And I guess, we all know what we're talking about is you see maybe those helicopters bringing in huge beams and such to a construction site. I know I've seen that. I've seen it in New York City, and it always kind of makes you a little nervous, doesn't it? Does me. Anyway, let's see here. Yeah, very, very low market cap on this one. A little bit shy of 83 million. So far in, let's see, what are we talking about in terms of volume? 143,000 shares. So, okay, you can't really make any judgments based on 2 days of trade, whether or not this is going to be any kind of winning stock or not, but just something interesting to take a look at. You do see some of these you hear about. They price at the low end of their range. They reduce the size of their IPO, and people get very nervous about that, think that, this thing is bound to be a loser. Not necessarily. A lot of that is just what's going on at the investment banks when the underwriters are all figuring out what kind of position they want to take. And a lot of times that after an initial correction, you do see more of the institutional buyers coming in. So there were some IPO disappointments today. And the reason I track the IPOs is because many of the small cap and mid cap leaders that you do see out there come from the ranks of recent IPOs. Very definitely worth tracking. I run several screens on these, as a matter of fact. So there were some that withdrew. There were 3 today. And let me 3 that did price last night and began trading today. Let me put this up here. Forum Energy. I've just put the ticker up there in front of you. FET. And this company, let's see, priced at 20, issued more shares than originally expected. This company makes equipment for the oil and gas industry, so they priced at 20, and let's see, last I looked, they were trading, right around 22.25. Okay, so getting a nice little IPO bump today, but don't forget, very, very typical for these new stocks to correct and to show a decline after they go public and then eventually resume a rally again. So let me see if I can get any data here. No, I'm not really showing too much useful fundamental data on this one. Did see a nice boost in annual earnings growth in 2011. Huge boost, as a matter of fact. So, this could be one to continue watching. Let's see here. Another one that priced last night and is trading today. The ticker here is OAK. OAK, like the tree. and that's Oak Tree Capital Group. So they're kind of classified as an alternative investment company. It's basically they're one of those independent investment advisors. They're not affiliated with any kind of wirehouse. Could be the kind of people that I reach out to bring on as guests on the show if they have some kind of small cap exposure or something interesting. Here's something I liked from their website. Actually, I was taking a look at it last night. Let me read this to you. Macro forecasting, not critical to invest. Excuse me, macro. I read that wrong. Macro forecasting, not critical to investing. We believe consistently excellent performance can only be achieved through superior knowledge of companies and their securities, not through attempts at predicting what is in store for the economy, interest rates, or the securities markets. Therefore, our investment process is entirely bottom-up, based on proprietary company-specific research. And that's mostly music to my ears, especially the part about that excellent performance cannot be achieved through attempts at predicting what's in store for the economy, interest rates, or the securities market, because nobody knows. Hence the term black swan. So that's interesting. I mean, I do like their research-based into stocks, bottom-up approach, but also the trend of the broader market does influence, particularly when you're talking about these smaller caps, low-priced, more volatile names that I'm focusing on this show and in the newsletter that we're about to roll out very, very soon. When you're talking about blue chips, dividend payers, Dow components, it's a little different. You're not looking at that same kind of volatility, and even if the market's in a downtrend, you often will get paid something to sit through the correction. So that's a little different. So let's see. Oak Tree Capital, they priced 8.8 million shares at $43 a piece. That was the low end of its range. It also slashed the number of shares that it offered, so that's what's known as a downsized IPO. And again, not necessarily to read too much into that for its longer-term prospects. Just looking at what's happening today. Now, this does look like it's, let's see, they priced at 43, trading around 41.71. So, not the most auspicious of debuts. But it sounds like they were aware of that going into today. Okay, so we've got earnings season underway, and of course, the big name that everybody's waiting for after the close. I'm going to talk a little bit today about some of these names that will be reporting today or have reported this morning. But today, waiting for Google after the bell. So let's see. I've got a daily chart up there, but I want to put on a weekly chart. If any of you heard the interview with Edward Hornstein yesterday, and he was talking about, he's a hedge fund manager out of New York, specializes in liquid growth stocks, although he did mention that he will go into small caps. It's just that the liquid growth names have been the ones outperforming lately. Trend follower. But he did talk about using weekly charts primarily. I agree with that. I use weekly and daily. A lot of times I will put up a 5-minute intraday chart just to give me a sense perhaps of how maybe specific news events or market trends intraday have affected a stock. But in order to make buy and sell decisions, I primarily rely on the weekly and daily charts. I know that's a little bit of a longer term chart that a lot of folks like to focus on, but this is, I'm talking about more of a swing trade here, not a day trade. The only time I'll really be day trading something, is if I make a buy and then there's some kind of development that just knocks a stock down very quickly, and it just looks as if it's not going to work out at that moment, so I'll get out of the stock. So I'll do that on occasion. Nonetheless, looking at Google's weekly chart, really not a bad pattern here at all that we're seeing. You did notice, let's see, we had a little bit, kind of hard to see here. I'm indicating on Tiger TV, you had the little consolidation back in November and December. I'm kind of indicating that on here. Then we undercut that low. And now we're moving on in the current consolidation in Google that looks pretty good. I'm going to come back. We'll look at the Google chart a little more, talk some more about some of the earnings that are due out today. I'm Kate Stalter. This is the Small Cap Roundup, 877-927-6648. Give me a call.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, we are back. Okay, I've got a Google chart up there. They're reporting earnings after the bell. Now, of course, this is one of those large cap S&P 500 companies that naturally everybody eagerly awaits the earnings. And of course, with Google these days, with the looming Facebook IPO and with increased competition from Facebook, it's classified as an infotech. And as with Apple, that's kind of a misnomer. I mean, as I've said before, Apple could really be viewed as a consumer discretionary. You could make an argument that Google is more a media company than an infotech. Advertising is always a metric that analysts look at, and if that's not characteristic of a media company, then what is? And then, of course, in recent reports, I'm just kind of remembering this off the top of my head. I didn't go back and check, but there's been, I think there was concern over the company's spending on some hiring and what it was doing to grow. And of course, always now, you're just going to see probably a lot of concern over how it intends to compete with Facebook. And again, that Facebook IPO is really going to be probably not even in the background of the Google report, really in the foreground of how the analysts are looking at this. A lot of times, though, just thinking off the top of my head what the effects of the Google report, even though it's one that everybody talks about and eagerly anticipates, in recent quarters, there have been instances where it has not affected the market because its results have been interpreted as company-specific rather than any kind of indicator of the wider economy. Now, of course, ad spending is something that obviously could be viewed as some kind of indicator of the wider economy, so that's always something to keep in mind. The Google report's always interesting, though, just because it's an interesting company. It is a huge company. It's one that most of us are very familiar with because we use its products on a regular basis. So just another one of those like Apple that I think people are there's a lot of consumer interest just because we all are very familiar with the company itself. Okay, let me move on here to some small caps that have reported or are reporting. This is Titan Machinery, and I've talked about this one a couple times this week. Let me just check here. I think they reported this morning. Let me just look here before the bell, or maybe it was yesterday. I think it was yesterday, actually. And you see what kind of action. We're looking at a weekly chart. Nice move up this week. The market is still in a correction. And it's just very, very risky at this juncture, particularly earlier this week before we had these rebounds that everybody's elated over. This would have been a risky position either way to get into prior to that earnings report, although it was showing a good chart. This has been a chart that I've been watching for a while. You do see a nice uptrend here, strong institutional buying. I'm going to digress for a moment here and talk a little bit about some of the renewed concern about algorithms, high-frequency trading in the small cap arena. When you do see the volume like this, you can see that there's the emotional component of this where you can tell that the fund managers, advisors who buy in bulk, some of the bigger advisory firms, the fund managers, hedge funds, mutual funds, do like what they're seeing when they're holding a stock like this, and it does show a good earnings report like that. I mean, that would have been a perfect position for a lot of these guys to buy into a name they were already holding. And it's true, even though, we talk here about the technicals and how to use the technicals and interpret the chart action to determine your buy and sell points. We hear it over and over again. The fund managers who come on the show, they are listening for the fundamentals. From their perspective, they're looking at these longer-term buy and holds. If they hear the company talking about the fact that business trends appear to be on the upswing, they listen to that stuff. Most of them, many of them. And that does influence their buying decision as well as the price. I have asked a number of these guys whether they do like to come in to a stock where it's getting 10-week support. So actually, I'm going to put this over to a daily chart over here on Titan Machinery. And you can see where it got support there at its 50-day moving average, rebounded off of that. So that would have been a place that the institutions came back in there. This is a small stock, market cap of $662 million. So definitely in our small cap wheelhouse, and one that we may well be continuing to follow. All right, I'll be right back. We've got a break coming up here. We'll look at some more of these small caps and IPOs, how they're doing. I'm Kate Stalter. This is the Small Cap Roundup.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of tfnn.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of tfnn.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, this is the show where we talk about those little companies you've never, ever heard of. Actually, this is one we've talked about on the show a little bit. I put Bank of the Ozarks up there, OZRK. Not really a household name. Let's see here. This company is reporting after the close today, and you're you're going to hear all about Google and nothing about this one. Let me put this up on I've got a daily chart in front of you. I like this chart. We've had one of the fund managers we had on the show. I can recall who it was, in fact, Tim Holland from Tamro. This is one that he liked, and it was just interesting because I had kind of been tracking it as well. When he mentioned it, it had popped up on my charts. So let's see here. I can show you some interesting things back here on the chart. If you're watching on Tiger TV, just early in 2011, so about a year ago, right in here, the stock formed a very shallow kind of sideways pattern. Then it undercut that in the big market pullback last week. Very bullish action there. Allowed some value buyers to come in, scoop up some shares. Now it's kind of correcting for a second time after rallying out of this low. This second area of base formation, after it pulls out of a low, that can frequently be very constructive. And the reason for that is because, you do have, in many cases, more investors and traders who do become aware of the company. It's, it's getting a little bit of attention because it probably is popping up on some screens. You've got some fund managers who like it. You got radio hosts who talk about it a little bit. So people do become a little bit more aware of it, and therefore new money is allotted to the stock. Now, by the time you go on and you've got your third pullback, your fourth pullback, it can begin to be getting a little tired, and there are fewer new investors to come in. Quantitative easing in the past year has changed that a little bit. You've seen a lot of companies a lot of these stocks repeatedly pull into corrections and then continue to rally. That's not historically what tends to occur, but some of the cheap money has made that type of repeating base action with new money coming in, has made that a little bit more common. A little bit of a historical anomaly there. In any case, you have got Bank of the Ozarks forming what I think is a very nice correction here, getting support right along that 10-week line. They report earnings after the bell today, so that'll be an interesting one to see. This has a market cap of about $1 billion, so right in the area that I would track for the Small Cap show and the Small Cap newsletter that's coming up. About 206,000 shares a day traded on average. So, that's low. That's on the thinner side. This company is based in Little Rock, Bank of the Ozarks. Not a big surprise to hear they're based in Little Rock. Let's see, they operate about 100 or so, a little more than 100 banks in the Southeast and in Texas. So, okay. Interesting one to watch. Let me show you another one here, and this one may be a little bit more familiar to people, possibly. This is a trucking firm. It's called J.B. Hunt. A lot of these names you just know. Bank of the Ozarks, I haven't really lived anywhere they have branches, but J.B. Hunt Transport, if you do any traveling around the interstates, around the United States, I've driven cross-country many times, not lately, but many times in the past, and I do recognize the J.B. Hunt name. Now, this is an interesting stock. Notice that it's kind of trending higher. It's sort of the uptrend has been sort of weakening a little bit in recent days, of course, as the market itself this week has fluctuated somewhat, and a little bit of a pause ahead of earnings. That's not unusual. So this one also reports after the bell today. Let's see here. This is a mid-cap, market cap of about $6.4 billion. Liquidity's kind of 830,000 shares or so a day. So that's JB Hunt. So that's reporting after the bell. Also, this chart here, it's been a good performer recently. Let me just I want to check something else on this one just to see perhaps what the daily action might be showing. on this name. So you do see that it's pulling back. It's kind of right now hovering right around the 10-day line. You can't see that on here, but nice support above the 50-day. So, this could be, if we were in a better market, in a confirmed market uptrend, which we are not, despite some of the action we've seen in the indexes lately, I'd be a little more optimistic about the prospects for this one. But nonetheless, even if these stocks do get good buying after earnings, not uncommon for them to clear some of these points of technical resistance and to pull back a little bit. Perhaps if the market is in a new uptrend in the next few days or weeks, could offer a new buy opportunity that perhaps could be a little less risky. And the reason I say that, of course, is just because about 3/4 of stocks tend to trend along with the general market, and not unusual to see even a good performer get dragged down just because everybody gets pessimistic and panics in one of these big days of selling. So that's a couple reporting earnings. Well, 3, including Google. So let's see here. The other thing that I wanted to do today, just kind of in honor of IPO season, before I do that, IPO season, did you like that? We have had quite a spate of them lately, although, as noted, a few did pull back today, retract their IPOs today, I think getting a little bit spooked off of the market conditions currently. Will be very interesting to see what effect the Facebook IPO has on the marketplace for some of these smaller names. Little-known names you've never heard of that could go on to become big winners. So let's see here. I want to put up a chart for a couple that I haven't. A couple of these we talked about yesterday. I'll just put this one up here again today. We were talking about it with Edward Hornstein yesterday. Something called InvenSense. This is a fabless chip maker. Not fabulous. Definitely not fabulous right now. Fabless, meaning they specialize in chip designs, the intellectual property designs for motion processors, then the chips are manufactured and licensed elsewhere. They're used a lot in the video gaming industry. So this one right now, trading well below that 50-day average, really not something that is going to grab my attention at this juncture. It's got some good estimates. That shows you the degree of confidence the institutions have in the stock. Nice track record of earnings growth and sales growth. So this stock still has some potential. Definitely one of those volatile names. It did show some promise when it was trending higher back in here late last year, and did make another new rally to a new high. Let's see, reached a new high last month, and then began to pull back. So this could be one to continue to track. I don't write these things off at all, but at the moment, nothing of interest here. Nothing to see, people. Move on. So I want to take a look then at a couple other ones. Okay, this is one. Spirit Airlines. Let me get the right ticker here. SAVE. That is one of those discount airlines. And this went public not too long ago. Let's see. Back in late May of 2011, went public at $12 a share, trading at around $21, between $20 and $21 right now. So that's pretty interesting. That's seen a nice run up in this particular name. Not really something that you hear about, is it? We get a lot of news, again, about the larger caps. You hear a lot about Delta and the possibility of buying that refinery. You get a lot of news about the bigger bankrupt airlines. No shortage of news on that front. But you really don't hear about something like Spirit that's just continuing to fly higher. In fact, it rallied to a new high last week. It is not far off of that this week. Not showing poor action at all as of now. Let me just go briefly to a daily chart on this one. I just find these names so fascinating that you don't hear about, because it can offer tremendous opportunity. I know the airline industry scares a lot of people, and that's wise, because you have to be a little bit paranoid what was the book by the Intel CEO? Only the Paranoid Survive. I liked that book. I remember I read that a few years ago when it came out. But the title is terrific, and it does apply to risk management in your trading and investing. Certainly. So with the airline industry, it is very, very easy for the whole sector to get dragged down on some kind of bad news. You see it time and time again. Nonetheless, if you do have your proper trading rules in place with regard to stops, whether they're hard stops, mental stops, however you choose to do that, and that's really just a matter of what your personal risk tolerance and trading style is, then some of these bottom-up investments really can be quite productive. It's definitely the case that you want to take a stock's industry and sector into account when you are making your buy or sell decisions. However, I really don't ever use that as the end-all, be-all decision. I remember I had a friend a few years ago who was a very successful, talented, knowledgeable trader. He made a mistake, though, by interjecting his opinion by saying that he would never go into energy names. And this goes back about 5 or 6 years. I can't remember exactly the year, maybe around 2000, actually maybe 7 or 8 years, 2004, 2005, sometime in that time frame. And, at the time, energy stocks were just rallying, and they were some of the market leaders. And, he admitted later on, he said, that by injecting his opinion in there, he did not do his portfolio any favors. So just a little something to keep in mind. It is a fine balance you have to have in there. So let me see here. Okay. Speaking of opinion, this is a good one. Let me put up another one here. NQ is the ticker. Now this is another one of these recent IPOs, went public again May of 2011. So been on the market a little less than a year. This is a Chinese developer of mobile software, okay? Security software. Is there any irony in a Chinese company making security software? I don't know. You be the judge. Right now again, this is one of those things where, many of us became understandably jaded about the prospects for some of these smaller China-based companies after some of the delisting, the accounting scandals and so forth that we've seen in the past few years. Back in 2009, some of those names at the time were terrific leaders, and some of those are delisted now. I just got to say, I was in some of them at the time, and I was out well before any of that happened, because the charts will tell you when it is time to sell. You don't need to worry about some kind of, SEC action or any kind of delisting on any of these to know that it's time to get out. And as a little aside, I don't have the exhibits in front of me right now, but I have shown in seminars in the past that there were signals in Enron well before November 2001 when the whole thing melted down. And that's not really an I told you so, not at all. It's just saying, as we all do here at TFNN, watching the charts, monitoring the technical signals, that will show you when there is trouble brewing for one reason or another, whether it's somebody's opinion, whether somebody's taking profits. The charts will tell you when it's time to get out. So none of this, it's a good company stuff or we didn't know. There are signals well ahead. So in any case, looking at Netkin, I don't know how you pronounce that, Netkin, good support above the 50-day line. All opinions aside, this is a very good performing stock right now. Not at a buy range. I would really be looking for it to surpass the prior high, which it reached late last month. And again, you'd like to see the market in a more significant confirmed uptrend, not just a couple days of rebounds, and particularly not low volume rebounds in the market. So, okay, so that's one to look at. I've got, looks like, this segment has just flown by, and this is the longest segment of the show. Hey, I want to give out the phone number, 877-927-6648. I do have time. If you want to call in, we can take a look at a stock or an ETF or whatever you'd like to discuss in the last segment. Oh, let's see here. There's one more. I have a few seconds, and maybe I'll come back to it in the last. Actually, my time is up on that one. I want to come back and look at Thurman Holdings, another IPO that you probably never heard of that has a nice chart. We'll take a look at that in the final segment here, which is coming up in a few minutes. I'm Kate Stalter. This is the Small Cap Roundup. Be right back in a few minutes after this next break.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
last segment of the show today. And I did give out the phone number, and we do have a caller on the phone. Wants to talk about a stock that's interesting. No, not particularly one I'm a huge fan of right now, but it's interesting. We've got Nick from Oklahoma on the line. Hi, Nick.
Hi. Thank you for taking my call.
Hi. How you doing today?
Not bad. In Oklahoma, it's spring is sprung, as Tom would say.
Oh, that's great. I'm involved with animal rescue, and we just are organizing a dog transport through Oklahoma. So I've had kind of Oklahoma on my mind in recent days, trying to find some people there to schlep some dogs around. Okay, let's yeah, it is. It's a lot of fun. It's a lot of fun. So let's take a look. You wanted to talk about Ciena, Cien. Right. Yeah. What are you looking at on this one, Nick?
I think it's trying to regain its 50 or 70-day line, and I was just looking into it as a potential buy.
You know, this is interesting right now, and I have to tell you, it's one that has fallen off my radar, just as it has really been a poor technical performer and a poor fundamental performer when it comes to the earnings, as I'm sure you're well aware in the past few years.
Right.
Yeah, and this has some mixed signals, both fundamentally and technically. Now, one thing I'm noticing here, and as I just said, I haven't really been paying much attention to this one lately. I'm noticing that there are some incredible analyst estimates for earnings. It's supposed to turn around this year, and then supposed to show some triple-digit earnings growth in 2013. So that's an interesting thing, isn't it?
Oh, yeah, that's one of the considerations. Yeah.
Right. Yeah. I agree. That's kind of something that makes it worth keeping an eye on. The other thing that, frankly, I do like about this stock, and I'm going to put a weekly chart up here. It is kind of making a nice little formation in recent weeks after it rallied off that huge bottoming base that it pulled into in the latter part of last year. It did undercut the prior lows back from 2010, so that's potentially a nice sign. And this current formation could be something significant. I do like how that's taking shape, forming maybe a little pullback here after a rally attempt. Now, let me see. This one looks like it's not supposed to report earnings till perhaps June sometime. So, you might have a couple months here, maybe without any huge catalyst to move the stock. Another thing that kind of does concern me, Nick, and I'm sure you're aware of this too, this whole sector has really gotten beaten up, hasn't it?
Right.
Yeah,
But at the same time, there are kind of new reports coming that the sector will be coming back, and especially communication equipment. Yeah, they have these slowdowns, slow accelerations.
Yeah. Right. Yeah, it's very cyclical. It's like it's notoriously cyclical, And then we did have that acquisition of AboveNet recently, and sometimes, M&A activity in a related name can bode well for others in the sector. I do like the chart. I like the fundamental prospects. My hesitancy at this particular juncture, just as we're speaking today on Thursday, April 12th, is just that the market itself is not yet in a confirmed rally. And if you did make a buy into this stock, you might have to be prepared to get out of it pretty quickly just due to market action. Let me just tell you real quickly here. I have a few more seconds. I think if I were looking at this, I'd be looking at a buy point above about 1694. So watch for that, Nick. Watch for 1694. That would be mine that I'd be looking for. Okay? Hey, thank you for calling.
Thank you very much.
All right, stay in touch. All right, thank you to caller Nick. Thank you to all of you for listening today. This has been fun as always. I've been monitoring the chat there about Apple and no G7. I will not take the blame for that. Okay, guys, have a wonderful weekend. I'll be back on Tuesday.